Urgent silver news. Price is about to change when this data is released. This is from FX Street, and this article hits on every issue that is coming at us within the next few days. Check this out because the numbers for silver are really looking quite frightening. This starts by saying silver slumps as China slows. Economic data and Fed decisions are in focus. And silver prices struggle amid China's economic slowdown, Asia's lethargic demand, and a relatively strong dollar. And investors are awaiting key economic data, not just investors, but you and I as silver stackers. You're going to see how this is going to play out over the next few days. I'm getting a little nervous about the price of silver, but at the same time, as silver goes down, it reaches more toward my buy price. So that's the struggle that we have as silver stackers. Let's start. It says right here, silver slides as China slows. Now, silver price has been under downward pressure for the fifth consecutive day as worries about China's economic slowdown amplify concerns regarding the country's demand for silver for industrial purposes. China's issue with their economy, their just nightmare that they're going through with the real estate issue is coming into play for us with our silver because they're slowing down. And we've seen this for 2 months in a row where China is slowing down with our precious metals. I'm confident this is not forever. This is not how the rest of 2024 is going to play out. But when we see this hit silver along with the economic indicators that I'm going to get to in a minute, it really shows us that we need to be paying close attention. This says right here, U.S. Federal Reserve can impact silver prices. Low interest rates typically reduce the opportunity. Now, this is something we have to look at. This article says it typically reduces the opportunity cost of holding non-interest bearing assets like silver, making it more appealing to investors. A rate cut by the Fed could boost demand for silver. Moreover, in times of geopolitical tension, silver may serve as a safe haven, further enhancing its investment appeal. Now, I'm going to push back a bit on this because, yes, when we have low interest rates, that can help silver. But at the same time, it can do the opposite because history has shown that when we have low interest rates, people take more risks. And silver is not seen as a risk. Silver is the safe haven. So yes, geopolitical tensions, like we see right here, geopolitical tensions are here and they're not going anywhere too quick, especially not in a year with this election coming up. But in terms of a low interest rate, that can actually flip what we see for silver because people take more risks in other endeavors with their money when they have more money to play with. Look at this. You're not going to like these numbers at all. This says potential downtrend looms with lower price targets. Silver is currently trading below the 50-period exponential moving average. That's the EMA, and is approaching the key support level of $28. Watch. A decisive breach of this level could initiate a downward trend resulting, watch these numbers, in further reductions in prices. Check this out. 26, ouch, 25, and 23 respectively. 23. Can you imagine if we dip back down to $23? I can't imagine it. If when the smoke clears from this major election coming up, and when the smoke clears from what we're going through with interest rates, I could imagine silver dropping down to 23. It's hard to say. Oh, look, it's me forgetting to turn off my ringer. When this all rolls out, I can see it. For this month, that would be a shock. Absolutely. Presidential race, yes, we already know when at times of uncertainty like we're going through right now, with all of this flip-flopping and changing with both parties, people feel uncertain, and whenever people feel uncertain, they do move to precious metals. So that's the push and pull that we have. Now, here's the key economic data that we have to look at. Investors, right here, investors' eye, key economic data. Now, as silver stackers, we don't see ourselves as investors typically, but this is the data we need to look at. Investors are closely monitoring the upcoming economic updates this week, particularly, this is what we have to look at, focusing on the U.S. personal consumption expenditures, that PCE. That tells us how much money really people are having, how much confidence they're having in their income and how much money they're having to play with. And that's a really key economic data that's scheduled for release in a few days. This data along with other indicators such as existing home sales and advanced second quarter GDP. The existing home sale data is just so important for us as silver stackers. I feel like, I've been in this game for so long, so many years, and I can't remember a time where housing data was so key to the price of silver, because the mortgage rates remaining so high and people not being able to take out loans with these high interest rates, the issues we're having with regional banks, everything, it's all of this combined for home sales. It really changes the game for silver, because people typically would be putting their money into home sales, into a new home, but they're not. And when they're not going into home sales, they're not going to just let that money sit somewhere. Typically, they'll put it into a safe store like silver. So this data coming out is really important. Let's keep going. The combination of potential rate cuts, political uncertainty, and geopolitical tensions, particularly between the U.S. and China, is likely to benefit silver and gold prices in the coming months. However, for the moment, the lower demand for industrial silver in China and Asia outweighs its safe haven nature. Now, if you're enjoying this video, please hit like, please hit subscribe. It really helps to get this information out there. Hit those buttons. It's really key. Now, in terms of putting money into a safe store of wealth, I wanted to show you this, because this is something that we really, I don't think we've really seen this data before. This says Gen Z and millennial investors, they want gold. Typically, we see gold. I'm going to show you this the data in a minute. But typically, we see gold as something for boomers or Gen X. But Mike Mahari here, this market analyst, is telling us, no, actually, we're wrong. It's not only for people 50 years old and up. It says, you might think gold is old-fashioned, an investment that mostly appeals to boomers, but in the real world, it's actually millennials and Gen Zers who are clamoring for that gold. Look, check out these numbers. According to a recent study by Bank of America Private Bank, 45% of wealthy investors under the age of 43, they own gold, and another 45% expressed interest in holding the yellow metal. In other words, 90%. Right there. This is real data. 90% of millennials and Gen Zers invest, or they're positive about gold. They have a positive outlook on gold. These are far higher prices than we find among Gen X, which is surprising, because you would think, look, Gen X and boomers, these are higher. A separate study by State Street found millennials on average have about 17% of their portfolios, and that's conservatively, it would be 10%. But they have 17%. 70% of their portfolios allocated to gold. The highest percentage of any age demographic, boomers and Xers, average about 10%, because that's what we've always been told, 10%. SoFi of Head Investment Strategy, Liz Young Thomas, told Reuters that young people have historically considered traditional assets such as gold boring, but strong returns over the last several years. And I would actually tweak that. I'd say last several decades, because that's what people are really looking at. The last 2 decades, that's what's gotten people so excited about gold. Look at from 2000, just 2000, the year 2000 to now. We're looking at what, 6 times? It depends on the week. Sometimes even 7 times your money. If you bought gold in 2000, it was hovering around, off the top of my head, I'll say $400 an ounce. So yeah, 6 times your value you've gotten. And that's what's happening is millennials are seeing this. Gen Z and millennials are seeing this, and they're saying, wait, this is actually totally different from my grandfather's gold, if I could put it that way. Again, if you're enjoying this video, please hit like, please hit subscribe. It really helps to get this information out there, and I will see you on the next one.